Hey everyone, how's it going? This is Patrick. Today this course is going to be about the SEC filings of the 10Q and the 10K. We're going to talk about the different sections in each of these filings, and then we're going to talk about how to update these filings. I've really designed this course for anyone that's currently working at a publicly traded company in the accounting or finance department, or someone that wants to work at a publicly traded company in the accounting or finance department. And then I've also designed this course for SEC attorneys or aspiring SEC attorneys. So with that said, I have not designed this course for someone that's looking for a long list of GAAP updates or SEC ruling updates. Those things are really important to the SEC reporting and the financial reporting process, but it's just not what this course is about. With that said, let's go ahead and get started. Alright, so when I'm looking at a 10Q or a 10K, I typically think about it in four distinct sections. You've got the business section, you've got the F pages, which are all the financial statements and footnotes. You've got the MD&A, which has the results of operations and liquidity and cash flows, and then the risk factors. So in the business section, it's unique to the 10K, and then it gets condensed into a few paragraphs in the 10Q. Now the business section provides an in-depth description of the business. The SEC has determined specific items that have to be contained in this section. And then in reference to the business section of the 10K, this is where some members of the executive team or other interested parties may try to put some marketing claims into the SEC filing. Now when I say marketing claims, these claims of marketing are generally targeted towards purchasing shareholders and not necessarily potential customers of the company. Now it's up to the SEC reporting team to attempt to resist some of the more aggressive and unsupported claims that people try to put into this section. And then you really need to ensure that the appropriate caveats for the claims are contained either immediately following any aggressive claim or in the risk factors. Now the business section contains a significant amount of wording that comes from individuals outside of the accounting and finance department. It's absolutely critical that you update all of this information and that it's all up to date on every single filing. And it's very important that you're sending specific sections out for updates every single quarter. And for this, I mean every claim in there. Now if we look at an actual SEC filing, there's over on the slide here, there's an excerpt that I've included here from Pizza Inn. Now these are real items that were filed with the SEC, and you'll notice that these filings are a little old in that they're 2014 filings. I promise you this is a brand new course that you're watching and listening to, but in an effort to minimize hurt feelings, the filings in this course are going to be all from companies that are either bankrupt or have subsequently been acquired by a different company or changed their name. So you may ask why Pizza Inn specifically? That's just because I love pizza. And so in this example, we have a claim in the business section that reads, "We intend to expand Pizza Inn's system domestically and internationally." This is the type of claim that I would not just roll forward mindlessly if I was doing the SEC reporting. I would either need to know that that is actually the case, whether it's from information that's just been passed down to me, or I would reach out to someone. And you can see in this example, here's a kind of just an example of what I would do is I would say something like VP of Business Development or whoever that is at the organization, send them a quick email message and just say, hey, I'm working on updating the 10K. Below is the wording that's in there from last year or from last quarter. Can you make sure that this is still accurate? And it is very important that you do this, and that this is just one particular section. There are a lot of sections in this business section that need to go out to the various people at your organization, whether it's sales and marketing, research and development, product development, all of those teams. Whenever applicable, they need to be the ones that are actually updating that wording. And so the F pages. So the F pages are the actual financial statements. Balance sheet, income statement, statement of cash flows, and then in the 10K, we've also got the statement of shareholders' equity. Or if you have a material change in a quarter, you can put the shareholders' equity statement in the F pages of the 10Q. So this section is the section that the independent auditors will actually be auditing or reviewing, depending upon whether it's a year-end or an interim filing. And then for the individual in charge of the SEC reporting, this is where a majority of your work is focused on updating the document. It contains just the basic financial statements, and then in a little bit we'll talk about what and when exactly we do to update these F pages. Next section is MD&A, so management discussion and analysis. Now there are a lot of components of MD&A, but the two main components that the SEC reporting individuals spend the most time on, and that is the results of operations and the liquidity and capital resources section. Now the results of operations section contains a description of the fluctuations in the income statement on a quarter-to-date basis and a year-to-date basis. Now it'll only be a quarter-to-date if you're just doing the Q1 filing, and it would only be a year-to-date information if you're doing the preparation of the 10K. The 10K, you don't do an explanation of the Q4 fluctuations, the Q4 quarter-to-date fluctuations in the 10K itself. A lot of companies will explain those fluctuations in an earnings release, but not on the 10K. Now the liquidity and capital resources section contains a description of the fluctuations in the statement of cash flows. And then later we'll also talk a little bit more about updating the MD&A section. And also the liquidity and capital resources contains information about where the sources of cash have come from in the past and where we expect sources of cash to come from in the future. Risk factors. Risk factors contain all of the potential risks that the company faces that could negatively impact the company. This section is often used as a defense against shareholder lawsuits, as it's intended to disclose to investors what could possibly go wrong with their investment. So for example, let's assume we disclose in the Q1 19 risk factors that X could happen, which could cause our stock price to drop. Now let's say next quarter in Q2 19, X actually happens and our stock price drops. It doesn't become impossible for shareholder lawsuits, but it becomes much more difficult for lawyers to be successful in bringing a shareholder lawsuit. Now, with that said, don't think that you're going to create any form of immunity by just pumping these risk factors full of every humanly possible thing that could go wrong at your business. There is no such thing as immunity when it comes to shareholder lawsuits. And when we're talking about risk factors and shareholder lawsuits, I just think of this quote from George Washington's farewell address. So just the weasel wording in this is just beautiful. So, though in reviewing the incidents of my administration, I am unconscious of internal error, I am nevertheless too sensible of my defects not to think it probable that I may have committed many errors. That's great, and that's a lot. That just reminds me of risk factors too, where we throw every potential thing in there, even though we don't even know about it yet. All right, so for this to qualify for continuing education for all you CPAs out there, we need to have intermittent review questions. So let's get started with this first review question. Which of the following is not a typical section of the 10K? So we've got risk factors, management discussion and analysis, or yearly detailed budget for the company, or the F pages. I'll give you all a second. All right, let's look at the answer choices. Correct answer is C. That is not part of the 10K filing, the budget. The budget, detailed company budget, is almost never going to be included in a 10K filing. You could possibly have particular projections of cash flow amounts of when you expect cash to run out or how much cash you expect to have at a future date. But you very rarely, I can't think of any time I've ever seen an actual budget in a 10K filing. Risk factors, like we said, you've got to have risk factors in the 10K filing. Now the 10Q filing, if there have been no material changes to the risk factors, you don't need to repeat the risk factors. A lot of companies will repeat them anyways. And then management discussion analysis is going to be in all 10Ks and 10Qs. F pages are going to be in all 10Ks and 10Qs also. All right, let's look at the second review question. Which of the following sections is a critical component of the management discussion and analysis? Let's see. So we've got results of operations. We've got the full statement of operations. We've got the opinion from the independent auditor. We've got the full consolidated statement of cash flows. So which of the following sections is a component of MD&A? I'll give you all a second to think about that. And A is the results of operations. The results of operations is a critical component. Remember, it's results of operations and liquidity and capital resources are the two critical components of MD&A. Full statement of operations, sometimes there will be abbreviated, well, there almost always will be abbreviated statement of operations information in the MD&A, but a full statement of operations is not necessarily a critical component. The opinion from independent auditor is not included in MD&A. If it's a 10K, that's going to be immediately preceding the F pages. And if it's a 10Q, very rarely do auditors or reviewers put the review report in the 10Q. It's not required to be in the 10Q, and oftentimes it's not included in the 10Q, in spite of the fact that a review was actually conducted. Now, the full consolidated statement of cash flows, again, the full statement of cash flows is very rarely actually regurgitated into the management discussion and analysis. Abbreviated information almost always will be included in the liquidity and capital resources section, which is a component of MD&A. All right, let's switch gears here. So now let's talk about, so the quarter has ended, but the GL is not yet closed. What do we do to update? So the quarter has ended. When I'm thinking about this, let's say it's March 31st, and we're a calendar quarter year-end company, and March 31st just happened, but the general ledger is not done yet. We cannot run an income statement and a balance sheet and update our statement of cash flows. None of those things can be done yet. It's easy to stop and say, okay, well, I'm just not going to do anything. I already have my document rolled forward. If you remember from one of the other classes, we talked about getting the document rolled forward before the month even ends. So I already have my document rolled forward. I'm not going to do anything until the GL is closed. No, there's things that you can and really should be doing before the general ledger is even closed. One of those is updating the stock option and the stock-based compensation information. That it takes a very long time to do. Now, in 10Ks, it's much more exhaustive disclosure, whereas in the 10Q, it's not as exhaustive of a disclosure, and sometimes companies will leave it out altogether. Most companies will include stock-based compensation disclosure in their 10Qs, even though it's not explicitly required by the SEC. So I like to get all of this updated. Typically, stock-based compensation information will be ready before the general ledger is even closed. So I get all of my stock-based comp footnote updated. Any of my weighted average shares files, I get those updated to get for EPS calculations. I get those all updated because we know what shares have been issued. We'll know that within a day or two after the end of the month. And then the other thing I like to do is go through the minimum rental payments, and if we are disclosing future minimum rental payments, a table, so in the 10K it's always required. In the 10Q, this is only required if there are material changes to leases or material changes to the future minimum payments. So if I'm doing that table, I like to get that table updated as well, so that I can just be that's one less thing that I need to do. As we'll see, when the GL is actually closed, that's when it's really go time for the SEC reporting person. So, couple just reminders. I like to send out any other non-accounting sections to individuals outside of accounting. So this is also what I like to do before the GL is closed and get this all updated before the general ledger even closes. Competitive information that needs to be updated, regulatory information that needs to be updated, legal information. Another thing that's really great to get done before the GL closes is go through that disclosure checklist. So the disclosure checklist, it's going to be provided by your auditor, if you are new to publicly traded companies and you're used to working at private companies, this may seem odd. Why is the person doing the financial reporting doing the disclosure checklist? Why are they filling out an auditor work paper? At publicly traded companies, this struck me as somewhat odd when I went to working at publicly traded companies, is that the company itself is typically doing that disclosure checklist. It's a critical component of their internal control systems, and they're the ones updating that checklist. Then the auditors just take it, scan it to make sure everything looks good, and throw it in their work papers. So this checklist, it's a very long checklist. It's longer for the 10K than it is for the 10Q, but it's still long for the 10Q. It's great to get this one done and out of the way. This can take depending upon how complicated your company is. Some companies you're going to have a lot of just NA responses for the disclosure checklist questions. Whereas if you're at a larger conglomerate company, you're going to answer yes to most of these things. And it's going to be a very time-consuming process. So for a small company, it could be anywhere from 6 to 7 hours worth of work. For a larger company, I would imagine you could spend 24 to 40 hours on just doing the disclosure checklist to make sure that everything is disclosed and to make sure that all of your responses are spot on for that disclosure checklist. All right, so now we're going to fast forward. The general ledger is closed. It is go time. This is when the SEC reporting person is going to be working a lot of hours and staying late, coming in early. There's a lot of work to be done. Everyone is waiting on you at this standpoint right here. So first, what I do is I update my Excel-based consolidation file. I typically like to do this in Excel. Not all companies use Excel for this. A lot of them will have their ERP system that can do a good consolidated roll-up. Other companies will have their budgeting software that can do a good consolidated roll-up, like a Host Analytics or an Adaptive Insights software. I like to use Excel. It's a lot easier to see what's going on. And with that said, the statement of cash flows, I have yet to see a good ERP or budgeting software system that I really believe in can give me a good statement of cash flows report. So with that, I always use the template that I have out on the course documents for this course, and you'll see that there's a template for just a statement of cash flows worksheet. It's just a generic one, but you're probably already using something like this. If you're at a publicly traded company, you're already using something where you put the balance sheet across the top 2 rows, and then you have the change that needs to be explained in each of the rows of the statement of cash flows. You're probably already using something like this. If you're not, you need to be using something that's very similar to the format of this course document that I've got out there for you. Take a look at it. Make sure yours is something like this. If it's not something like this, you're going to be spending a lot more time than you really need to be on putting together the statement of cash flows. So then I proceed to update the various footnotes in the F pages. Now, after I've updated all of the F pages, I shift my focus to MD&A, and this is the most time-consuming section of the MD&A are the results of operations and liquidity and capital resources sections. So results of operations. Results of operations section is the section that provides the explanation for the material fluctuations in the specific lines of the income statement. Typically, companies are going to provide a paragraph that explains the fluctuations, and such explanations must be quantified. So let's take a look at this Pizza Inn example here. Here we've got cost of sales primarily includes food and supply costs. So this lead-in sentence oftentimes will be somewhere else where it'll say what are the components, just high level what goes into cost of sales. It's okay to put it right here in this explanation too. And then this is going to be very canned wording. This will be at most companies. These costs increased by 4.5% or $1.5 million. And you can see that's just the difference between 36.3 and 34.8. So that comes to the 36.3, and you can see where those numbers come from. And then the heart of all of the work in this section comes in this little sentence right here. The increases in costs were primarily due to the increased number of company-owned Pi 5 units, partially offset by lower distribution costs due to lower food and supply sales and one less week compared to the prior year. One sentence, a lot of thoughts in there, and yes, it is typically going to be this long run-on sentence. That's just the way it goes. One thing I'd like to point out is that when writing that specific sentence, or there may be a couple sentences that you use, one thing that is typically very important to do is to quantify those numbers. Now, there are different companies, and I've seen a lot of companies that do not quantify those numbers, and we saw in that last example, they were not quantified. I've also seen SEC comment letters on asking for those things to be quantified. I think it's a very good practice to actually quantify those numbers. So, for example, here's an example of what would not be acceptable. Company's research and development expenses increased as a result of more products being developed. I mean, that is so vague. What could an investor possibly glean from that type of information? In my mind, that is just bad disclosure there. Something that would be more acceptable. $2.3 million increase in R&D was due to $2.2 million increase in comp related to this particular project. $900,000 due to increased supplies as a result of higher commodity costs, partially offset by $600K decrease in costs related to the discontinuation of ABC project. This is way more meaningful. If I'm an investor and I'm looking at this, this is way more meaningful to me. So I strongly urge everyone to quantify those numbers, and a lot of times, even though the auditors are not actually opining on the results of operations, definitely all auditors are going to read that specific sentence in great detail, and they need to make sure that it's consistent with your F pages. They don't need to provide an opinion. They just need to make sure that it's consistent, and you'll oftentimes get a comment, a recurring comment from your external auditors saying you should quantify those fluctuations. Don't just state that they fluxed, and give some information. So let's talk about a few tips when you're writing that section. Try to vary your word choice. It is really easy to get started in there, and you're saying this increased because this increased because this increased, and then it's so many increases or so many decreases. Just try to don't get too creative, but try to vary that word choice, because otherwise it starts to get really dry to read, and it looks bad when you're repeating this exact same word over and over again. And then when explaining an overall increase, like in that $2.3 million that I was talking about before here, see, we could have just stopped at this 2.2, right? Because we don't have to explain the entire 2.3. We just need to explain the material changes in that 2.3. So we could have stopped. But you can't really just stop if there are other material items going both ways. You need to talk about those other things too. I mean, you could have this 2.3 million explained by this 2.2, and then you also have a $10 million increase in for one thing, and a $10 million decrease in another thing. So you could have these large fluctuations that are being buried because they're netting out to each other. So you need to explain even the ups and downs, even if they do net out to something that's not material. So like we saw when explaining an overall increase, like I did up above, the subcomponents should explain just the material parts. They don't need to add up exactly. Like in that example above, if you actually do the math, we've only explained $2.1 million of the variance, leaving 0.2 left to explain. Now, I don't like to explain it down to the penny, or in this case down to the 100,000. It doesn't need to be. And anything that's that small, it's not going to be material. So Another thing, if you have material fluctuations going both ways, like we had the 900 and the 600 above, you got to call them both out. And then another thing, this sentence, or that small collection of sentences, it is going to get a lot of rewrites, a lot of rewording, and this is one of those most looked at sections of the entire 10Q or 10K. So everyone needs to be in agreement on what it says. So don't take it personally when everyone's giving you edits on this section. You may think, oh my gosh, this is just one sentence, people, like, get over it. But this is one of the most important sentences in the entire filing. So, and then another thing, when writing this, be as concise as humanly possible. Try to not use more words than you need. And that goes for the whole 10Q or 10K. It is great to be as concise as possible. Look at sentences and see if you can pare them down and still retain the meaning. It's great if you can do that, but you don't have to get too crazy with it. And then the other thing is proofread and rewrite this section multiple times yourself before you even provide it to others. What I do is I will write the results of operations. I'll write it, I'll make sure that it's something that I get done by a particular night, and I give it a day and look at it the next morning and just look at it with a fresh set of eyes and see if there's anything else that I can find that I need to update in it. So the auditors, like I said, they don't provide an opinion, but they are going to read this sentence and make sure that it is spot on with what you're saying in the F pages. All right, so let's go through some review questions here. Now, this is a fill in the blank. When writing the results of operations, A, companies generally provide explanations of variances in the statement of cash flows, so in the results of operations, or B, companies explain the significant regulatory risks that the company faces, or C, companies discuss the significant fluctuations in the income statement lines, or D, non-resource extraction companies are required to disclose their mine safety issues. All right, so let's look at give you guys all a chance to think of your answers. All right, let's look at the answers. So the answer is C, companies discuss the significant fluctuations in their income statement lines, so when writing the results of operations. Now, providing the explanations of the variances in the statement of cash flows, while that is in MD&A, it's in the liquidity and capital resources section. B was companies explain the significant regulatory risks that the company faces. That's in the risk factors, not in the MD&A. And then D was that was just a throw out one, right? Non-resource extraction, full consolidated statement of cash flows is maintained in the F pages. And non-resource extraction is just not applicable, right? So let's look at providing guidance for the current year, and this is in the MD&A section. So in the MD&A, there's typically going to be some guidance here. And one thing with this guidance is this guidance can be subject of shareholder lawsuits. So you don't want to be too aggressive. And a lot of times companies will get too aggressive here for not a good reason. And it's also good to qualify all of these things. When you have this particular section, oftentimes will also be read by the executive team, the CEO, and the various individuals on the executive team. And they may not understand why we need to put all of this qualifying language like we believe or may or could. It's really up to, if it's those meetings, it's the CFO. If you're the person that's in those meetings, it's up to you to really qualify these claims, and you need to say we believe or may or could. We cannot speak in absolutes. And so this will give guidance. When I say guidance, I mean something that's predicting the future. So we believe that the net decrease of 2 domestic pizza units during 2014 reflects an overall improving trend in net domestic store closures that was interrupted by the expiration of abnormally high domestic franchise agreements in fiscal 2013. Right? So they're saying that things are going to get better in the future because we closed those units. and we believe that the opening of 27 new stores in 14 reflects the beginning of a new friendship, right? So this is perfect example of where you oftentimes will have someone at the higher level saying we need to really be selling our company to, not selling the company, but selling the potential for improvement in our company to the investors, and we need to start making the picture look a lot better. And then this is where you have a CFO that comes in and says, no, we can say that, but we need to qualify it. And what also, when you put these qualifying words in, it pulls you into the safe harbor provisions, which do provide some possible defense against lawsuits. Again, like we said before, there is no immunity to lawsuits, but it'll help. So the other section of liquidity and capital the other section of MD&A is liquidity and capital resources. So this is the section that's going to explain the large variances in the statement of cash flows. And when we have these large variances, we do it just like they've done it here in this example, where you've got 75,000 used, and then you've got 734,000 as an inflow. And one thing that I just kind of want to point out here is that you've got, when you're doing your whole financial statements, and when you are actually preparing everything in here, you need to review and proofread everything and really make sure it's right. I mean, you can't be perfect, but you need to be as close to perfect as possible. And here's an example. In this, you could find this in any filing, no matter how careful you are. Things like this are bound to happen. But here, and I just stumbled across this, I really was not digging for this, but here you've got 0.1 million, and then here there's no million after it. It's obvious. We know it's not 70 cents. We wouldn't be talking about 70 cents. But with that said, you know, and you're not going to get sued over this either. This is not something that's really going to draw a shareholder lawsuit. But what it is it questions the credibility of everything else in the document. I know when I review something, if in the first 5 to 10 minutes I can't find anything, then I start getting it in my mind that, okay, this is probably very accurate and I'm unlikely to find anything. And just in my mind, I don't dig quite as deeply. But when you start uncovering these things, then you start thinking, what else is in there? And that's what happens. You hurt your credibility with your outside counsel, with your person that's reviewing the document above you, with the auditors. The fewer of these types of things, the more credibility that you're going to have. So, and it's also pretty common in the liquidity, and so stepping back, with the liquidity and capital resources, it is pretty common to just see a lot of regurgitation of what happened in the statement of cash flows. They'll say cash flow from operations increased or decreased be provided by accounts payable, or vice versa. It's good to, you have to do that. You have to regurgitate a little bit to explain it, but if you do say that it went up or down because of AP, you need to say why. You need to have a good explanation, and typically timing of accounts payable invoices is not a great explanation. That's kind of a cop-out explanation. So it's good to actually figure out a decent explanation of why something happened instead of just accounts payable changed. And here, there's one thing, is there's this kind of confusing little trap when you're explaining fluctuations in liquidity and capital resources. SEC guidance says that in that particular section, you need to compare what happened this year to what happened last year. So if cash flow from operations is X dollars this year and it was X dollars last year, and it was Y dollars last year, you need to explain why they're different, right? And what happens is that some companies will just take a very literal interpretation of that requirement, and they'll get themselves all tongue-tied in a sentence like this, like accounts payable increased by $450,000 in 2017, but it decreased by $600,000 in 2016, which represents a change in accounts payable of 1.1. However, accounts payable on the balance sheet changed by 1.5 because of non-cash transactions, and it just like, ugh, no one gets anything out of a sentence like that. That's just a nightmare. It's a nightmare to read. An investor just throws their arms up in the air and is like, what the heck is this? And so, and not to mention, it's probably factually accurate, and it takes a really long time for the person doing the SEC reporting to really try to word something like this correctly, but it's impossible for anyone to even understand it. And so the way to get around this is, and I say get around it, the way to still comply with the SEC rules is discuss the fluctuations in the statement of cash flows for each period distinctly, and then users can look at the fluctuations. And what I mean by this is, let's say we're comparing 17 to 16, okay? Explain what actually happened in 17 in isolation of 16. Say accounts payable went up by this because of this. Say inventory went down by this because of this. And then copy and paste in the same type of explanation from 16 down below. And then the person can say, okay, in 16, accounts payable went up because of this, and inventory went down because of this. And it's much easier to see the story than to try to get stuck into this gobbledygook explanation that no one benefits from. So here, liquidity and capital resources, the other big component here is you need to talk about where the cash has come from in the past and where it will come from in the future. So in the past and where it currently came from. So the currently came from, that's typically those explanations in the statement of cash flows. That's where the cash has come from and where it comes from currently. And then we need to talk about, okay, are we going to need more cash for operations or for whatever reason in the future? What do we plan on doing with all this cash? If we do need more cash, how can we go about getting that cash? Do we need to raise equity? Do we need to sell debt on the open market? Do we need to increase our cash flows from operations? Where are we going to get that cash? All right, so let's do our final review question. This is a fill in the blank. So when writing the liquidity and capital resources section, it's either A, companies generally provide an explanation of where cash currently comes from and where it may come from in the future, or it's B, companies will present the operating leases that the company has, or it's C, companies provide an explanation for regulatory changes, or it's D, companies need to provide the name of all of their subsidiaries. So this is liquidity capital resources. I'll give you all a chance to think about it. All right, let's look at the answer. A, of course, provide an explanation of where cash currently comes from and where it may come from in the future. Operating leases are typically not discussed in liquidity and capital resources section. Explanation of regulatory changes is not typically discussed. That would be in the overview section typically. And then companies need to provide the names of all subsidiaries. That is true in the 10K, but it's not in the liquidity capital resources section. All right, so today we talked about the SEC filing and the different components of the 10Q and the 10K. We also talked about how to update those components. I really hope you found this course useful. With that said, I would strongly encourage you to become an author. Write an article about something regarding publicly traded companies. I'll publish it on the website and you get free CPE credit for doing it. I'll help you edit it, everything. Another thing that I'd strongly encourage you to do is become an instructor. Teach a course about something regarding publicly traded companies. Maybe you're an attorney and you want to teach a course about coming from the attorney side. Maybe you're on the general ledger side and you want to teach about how working at a publicly traded company from the general ledger side, internal control, external auditor, any of those viewpoints would be really cool, and I think people would love to see it out on this website. So reach out, send me a message. My email is out here on the website. And to get CPE credit, if you are interested in CPE credit for this course, you do need to take the quiz. There's a short assessment that you need to take. It's out on the website. There's a link to it, a take quiz for CPE credit. And I'll send you a certificate proving that you actually earned the CPE credit. As with all CPE courses, anywhere you take, different state laws require different things for CPE credit, so just check with your state and make sure this qualifies for CPE credit. Most states it should. With that, thanks again for joining me, and check out some of my other courses.